thanks for joining me on my market report. My name is Mike, and this market report is on mortgages. We kind of get into what's impacting mortgage rates on a daily basis. So whether if it's economic data that got released, or some headline news, or some geopolitical, or sometimes something that doesn't usually always make sense to those are just looking at the numbers. Usually, like the sentiment changes with the investors, and sometimes you may not know that. Um, of him. So we kind of try to get into that data out there for you guys. Um, so that way, if you guys are in the market refinance or purchasing, you're probably watching rates, and this will hopefully give you some type of information that's out there that may help you to make an informed decision whether to lock in or you want to kind of hold off. So hopefully this information will be helpful for you guys. If you guys do like these videos, I greatly appreciate if you guys can smash that like button and follow us. Uh, Without further ado, we'll jump right into this. We'll start off with the economic calendar. We got just two small items here. We got the industrial production for the month of September. It's August was actually came in 0.4%. However, that got revised lower to a drop of 0.1%. So instead of going upwards, it actually dropped 0.1%. Forecast is calling for a 0.2% increase for the month of September, and again, it dropped 1.3%. So we're seeing manufacturing, industrial areas dropping in this time period here. Now we also got the NHB housing market index. This is a index that gauges confidence level for home builders. And as we can see here, we had a 76 in the previous month back in September. Forecast was supposed to maintain that. It kind of surprised everybody. It came up at 80, so that's a really good number for us. And kind of, it did surprise a lot of people with that higher number here. Now, stocks are in mixed territory. We're seeing the Dow, I believe, in negative territory today. A lot of that had to, early on, China came out with some data that shows their economy dropping pretty dramatically from Q2 to Q3. Went from like 7.9% to 4.9%, so 3 points. It dropped. And then later on in the day, there's also been some concerns, of course, inflation. We're still seeing energy prices rise, including oil hitting up, just above $81 a barrel. So we're seeing those rise, and those keep continuing to go up, and that's creating higher inflation. So a lot of people are having concerns about this. We had some addressed back in Europe as well. I believe the UK Bank of America, or Bank of England's president was talking a little bit about it as well, about perhaps raising rates sooner than later type of thing to try to stave off inflation. We're talking about that, probably start doing that about mid-year, 22, start raising rates to try to stave off inflation as well. Um, so with that in mind, let's take a look here at the mortgage-backed securities, see what rates are doing today. We're down currently about 9 basis points. However, we were down much lower. So a lot of lenders came out with much worse pricing, as much as even maybe equivalent to about a quarter percent to the rate. So that was that big one. But since then, we came a little bit better, as you can see here, repricing. It improved some, so we're still probably down about 1/8% to the rate difference from where we left off on Friday. Even though Friday we had a pretty big drop here as well. So again, hopefully this will kind of reside and help bring us back up. We'll have to kind of wait and see. This is what it kind of looks like for the day. The volatility, as you see, coming down way down here. Then we worked our way up. Now we've been kind of going back in more of a middle, more moderate growth here. So we're kind of more in the middle there. If that makes sense. So like here, so we got wicks on both sides here, and we're kind of just sitting in the middle here. And we'll have to wait and see if that, if it improves, continue improving. We were, when I've been doing this, or about between 11 and 13 basis points, so it did improve to 9 basis points within just the last few minutes here. So that might be a positive here. And then we got 10-year Treasury. 10-year Treasury has been spiking. It hit the 1.6 range earlier today, as we'll see right here. Hit about 1.6 right now. We're just under 1.6. Friday we broke above all that. Those levels here with the two technical levels that we were fortunate to break below earlier in the week, but however Friday it was the opposite. And we're brought right back upwards here. And again, we're just under 1.5, just under 1.6 right here. Now we're also seeing a rise in the interest rates. The 15-year at national level is 2.54, and we're at about 3.16 for the 30-year. This is kind of the national average for conforming limits out there, conforming rates out there. And they do have they do have built-in points in there, so that way you kind of get an idea as to what's factored out there. All right, folks. I hope these answer your questions. If you guys need any help with anything, whether it's a refinance or purchase, we're here to help out. We'd love to be able to earn your business, or if you got just questions, we'd love to be able to answer those for you as well. Please feel free to just reach out. And meanwhile, if you guys do like these videos, greatly appreciate if you can subscribe and smash that like button. Otherwise, we'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye bye.